Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, hit that like button, and share these with your friends. On this channel, I discuss the fundamentals, my view of what market sentiment is doing, as well as a technical overview of a number of markets that I feel are important to watch closely. Last Friday, we saw an extension of the rally that started around 11 days ago. We've seen the market move into the target zone that I've been discussing for a number of weeks between the 28.50 and the 29.20 level. Even though we're down overnight slightly, it looks like we're going to continue to move toward that. What we're seeing on the planet is Germany is starting to open up some of the economy, but most importantly, we're going to see the U.S. start to open up the economy. It's up to the individual governors to set when their economies will start to open up. In some cases, there are areas of the state that are okay and other areas that have more of an issue. And that will continue to be the case as we open up this economy, and hopefully it won't take long to get things back to reasonably normal, at least 60 to 80% of the economy back online. That's going to be really important going forward, including probably additional stimulus is going to be necessary for small businesses, as many businesses are on the brink of failing right now. As I've talked about for weeks since this situation started, that the economy has been broken. There's a lot of things you just can't turn back on, and we're going to see those things happen. The markets, however, have been disconnected from the reality of what's going on in the backdrop. We've seen 22 million people file for unemployment, and this Thursday, we're expecting again to see another 4 to 5 million. So we're looking at 27 million people out of work, and there's no telling how many really are out of work, because there's a lot of small businesses that are shut down that aren't necessarily reporting into that network. As we go forward, it's going to be more difficult to determine market sentiment, primarily because we still don't know what's going to be open, how fast things are going to come online, and what things have been broken. I keep pointing you folks to May 5th. That will be the first time we've gone through that. That's not far away now. And then the big number will be in the 1st of June when we went through 2 months of this. One of the other elements that will be out this week to watch will be earnings. And there are about 500 earnings reports coming out this week. And as I mentioned in the last few sessions, we're not really getting any sort of forward-looking statements from these companies, which leaves most analysts and everybody guessing at what might be in for the future. Nobody wants to touch it. That's why when the housing starts number come out, there's not even expectations for that. But as we get these earnings reports coming out, we're going to get a glimpse into some of the statements that the companies are going to make about the shutdown. This is going to affect sentiment substantially. This is going to be a very pivotal week, primarily because we're coming closer to that May 5th number. They're actually going to see the carnage that has been created from this shutdown. We are a long ways from being over with the economic situation, and the markets are likely to see some reaction eventually, but for the moment, they seem to be operating in their own realm. Let's take a look at the technicals and see what they tell us about the beginning of the week. Taking a look at the dashboard of the Portfolio Expert process, you'll see equities positive by 29%, ETFs 22%, and mutual funds 15.54%. We look at the database, we're not getting a lot of traction. You'll see in this last B bottom in 2018 that the database was almost following week to week. We're just not getting the follow through over the last couple of weeks, which tells us that this rally is extremely narrow. The lack of traction in the database tells you exactly how vulnerable this rally is. Regardless of that, we're seeing some positive rotation, but not a lot here. You can see some of the dark green, which is the new buys in these different sectors. As we go down to the industry groups, you can see there's some green, but it's very spotty. There's not a lot going on. Where the real interesting thing that's happening is when we look at the VPM 2.0 database, to see exactly what kind of traction we're getting on a short-term basis. That's much more robust. Bullishness, looking at the daily profile of the symbols
There's 16,761 symbols. There are now currently 5,906 symbols. About 3,800 of those new buys have come through in the last 2 weeks. This is actually building some momentum, and if this database gets over 42%, then this will tell us that there's a sustainable rally, and we're likely, as I'll go through in a minute, move up toward the 200-day moving average and maybe even above that. Regardless of what the background in the economy looks like, the technicals and the number of stocks and symbols that are coming into trend mode are pretty substantial. They're on a short-term level, but not on an intermediate yet. But this could drive us toward that intermediate signal. You can see below the sectors that are long. Basic materials up 8%, capital goods up 5%, and the only negative is transportation, but that's only 4 days old. Most of these are only 13 days old. So the last 2 weeks has been the bulk of the buying. It's actually 43 industry groups, 6 sectors are long, and 5,906 stocks. So this is substantial, telling us that there's a lot of short-term underlying trends starting to support this market. Looking at the daily S&P 500 cash, one of the more interesting things that I see happening here is we are continuing to see the contraction of the daily ranges. We're down to 44 handles, a long ways from the 200 handles we were just about 4 weeks ago. So this is an amazing improvement. Liquidity appears to be improving across the board in all the indices, and the spreads are tightening. Everything is becoming more healthy. So the S&P continues to break out. We're seeing the 10-day moving average cross over the 40, which could be a negative cross. My expectations are still to see this zigzag unfold. The zigzag formation is the one I've been talking about. Originally, this was going to be the high. It appears to be extending, and we're going to head up toward this 3012 level, which is the 200-day moving average. But there's still that barrier at 2920, which was the original target zone. The extreme resistance for today is 2918.20. So it's right there if we went to the extremes. With the ranges only being at 44 handles now, it's very possible to reach these numbers. Originally, when I started doing the broadcast tonight, the futures were down about 0.6 to 0.8%. We are now flat. We were actually positive just a few minutes ago. But after this pattern is complete, we should still see a move down and some type of consolidation. I'm still expecting this large consolidation range to unfold, and it goes along with all of the dialogue that I've talked about over the past several weeks. And what I talked about tonight is the economy is still uncertain. Ultimately, there's going to be some signs as we go through earnings here, and the rhetoric around this situation is start to point out that there is stressors on the economy, that folks aren't just going to keep buying stocks until they make a new high. Right now, the technicals are still telling us we're seeing accelerations down here in the PPM1, PPM2, and PPM3 is about to break through its second derivative, which is a very positive sign, which tells us that the 40-period moving average that's coming through here is going to start to bottom out. And I talked about this crisscrossing of these averages. I know there's a lot of lines on here. What we're going to see is this mesh that is going to build, and the markets will start to trade around those moving averages over the next, let's say, 5 to 8 sessions. We should start to see that. There's still not a peak been rendered in this market yet. Friday's close was very positive, and it looks like it's going to continue to the upside and possibly as high as that 200-day moving average. But I think we'll have to watch this 2920 and the reaction to the market around those levels. On this bar here, the expectations for this week's range, interesting enough, here's that 2920 number again. Shows up at 2921.45. This is the resistance one for the week. Above that is 2973 and 3026, which those numbers get us to that 200-day moving average. Our short-term models are still long. They're not signaling a top as of yet. I know I did a video several days ago. I was saying that the market is nearing the top. I didn't say the market was at a top, and that's important. I hope that most of you are getting to this section of the broadcast because it's important to watch all of this so you get the context, because I interweave a lot of things that I talked about in the opening along with things that I say throughout the entire broadcast. Most likely going to follow through, and we're going to see at least a move up towards these 21 and 40-day moving average, which is also the 200-day. So there is a magnet pulling this market up there. Now, the one thing I want to caution about when you look at this, the 10-period moving average is declining sharply through this pattern. In fact, it's down 1.77. That suggests that there's a good chance that the S&P will move back down to 2771. This just emphasizes that the 2920 level is very significant in this pattern. Reviewing the 10-year Treasury, it looks like to me they're bottoming. We're going to start to move back toward 0.9, a possibility of going back to 1%. Several days ago, I talked about gold being an explosive pattern, and it has continued to pull out since that report came out. What I was talking about was that we are in a 1-2-1-2 pattern. That's this pattern here. This would be the 1, a 2, and then another 1, 2. And with these averages coming up underneath here, these are going to be your support zone. Market should hold in this area here and then start the next move to the upside. 1656 would be the ultimate buy zone. You won't have to risk much, probably below 1638. So that'll be your buy point. And this trade isn't going to snap back and just explode. This is going to take 8, 10, 12 days. This also might coincide with some kind of minor market correction once we complete the pattern I just discussed in the S&P 500. Last market I'll cover tonight is crude oil, and there seems to be no bottom. I talked about 17 being support. We're continuing lower. We're down 16% right now at 15.19 on the May crude. Looks like it's going to zero, but it's not. There's no current targets to the downside, so it's difficult to estimate where it could go. But the pattern is so negative. We have ppm1 minus 0.58, ppm2 minus 2.25, and ppm3 3.08. So these are probably getting close to an extreme, but where this thing bottoms is virtually anyone's guess. The only thing I can key on to look for some sort of price low right now is by looking at the Fibonacci projections for the week from the VPM rangefinder indicator. So the rangefinder suggests that 1442 is support 2. The low has been 1447. Maybe that was it. Below that number is 1239 and all the way down to 10.57. So $10.57. This is just going to devastate the energy sector. This is also one of those oh shit moments that we don't know what the effects are going to be. Right now, it appears switching off to equities and combining these markets all together. Equity players are ignoring what's going on in crude oil. Crude oil is most likely got it right. There's going to be virtually no demand in this market for a while, which tells you how bad the economy is probably going to be in spite of all the Fed pumping of money. That's what equity market players are playing off of, and that may work for a while. We'll have to see how long. So if you made it this far into the video, congratulations. And I am going to start doing a weekly live show, roughly 1:30 on Wednesday. And I'll talk about that in the next couple of videos. Thanks again for watching. Good luck out there trading.